See, it's a good team.
Ladies and gentlemen, welcome back to another episode of Chart Talk, coming at you every Monday. Let's jump right into it with a little market outlook. All right, we've been on this pretty crazy run since early November. Then we got the vaccine news. We kept pumping it up. And then last week, we got our first signs of a downturn. What was it, last Wednesday? Market was at highs, looked all good. We pulled in, and we kind of pivoted Thursday, Friday. So you want to see that follow through today. And we just had the full lockdown trade in effect today in the S&P where, you know, we got new lockdown measures in New York's warning they might go full lockdown. London went full lockdown. So the S&P, the reopening stocks, they got sold. And the NASDAQ names were much, much stronger, closing positive on the day, while the S&P names just sunk the entire day. So after you get that Wednesday, Thursday pivot, this is not the action you want to see in the S&P. Kind of sluggish behavior at highs. I don't have the, same gusto I had a few weeks ago trading this market. I think we're just going to chop around to the end of the year personally. But what are your thoughts?
Yeah, I thought the same. I think even for me, I had some orders put in this morning that all looked great. And then by midday, basically all the sectors closed bearish engulfing. So tends to be a little bit of a red flag to be a little bit more cautious going ahead than we've had for the last month, which was probably one of the easiest months we've had in a long time. So I'm with you on that.
Yeah, definitely taking the foot off the gas pedal myself till the end of the year.
Mm-hmm. Yeah, and if you guys taking your foot off the gas pedal, maybe hit that like button while you're doing it.
Oh, that's trash.
Yeah, I know. We're not YouTube guys. Anyways, if you want to jump into some of the member ideas, we'll start with Tom Van Meter. He's looking at this CME up through 185.
Yeah, in time that looks good. We just saw it fail today, so it clearly needs more time. Just keep an eye on that. Set an alert through 185 in time, but it looks like it needs a lot more time.
Next, we got DG through this 208.
Ooh, I got bad news. That shit looks like a fucking meaty short.
down to 205.
Well, here's what it is. It's an inflection point at this huge support area, and if it fails this area, it should break down this support level and kind of head to this, 190, 195. So it has to hold this area, and then you could look to buy it. Look to buy it on the way up through 208. But if it fails the support area, I think this one's coming down.
All right, let's see. Next, we have David C. He was asking for a question.
I'm actually writing that one down as a short tomorrow. Thank you.
All right, Brandon. So it was one of Brandon's ideas. So.
Well, no, I mean it breaks higher through 209, 208. That area, it looks good, but just doesn't look like it's going to do that.
Yeah. The one good thing was his stop is, in this example, he wanted to buy up through 208, and his stop was versus 205. So even if he did buy it and then you were looking to short the 205, he would be out as you got short. So.
Well, all right. So here's why I short stocks at levels like that. Where do you think everyone in the world's stop is placed in this stock? Who's long?
It's going to be 205.
Below 205. So I short that area and I get all that selling action as a momentum trade. But I digress. Let's keep it moving.
All right. So next question we have from David. He was asking for a practical example of the importance between FIFO and LIFO. We touched upon this last week in one of the big pictures. I put up a chart for you, Shake. You just go to the email. It's a very simple example right there. Yeah.
Got it.
All right. So in this example, we're going to say that you first bought the SPY like we did about a month ago through 330. And then recently, as it started to flag through 365 or 364, you added again. So you increased your cost basis. Now, as the market starts to roll back over, you don't want to get rid of that first, the FIFO, the good stock that you bought from 330, but you necessarily don't want to hold that stock from 364 now that the market's probably going to be pulling
Now,
back
Ben, I have
in.
a question.
Yeah.
What is the advantage of doing the LIFO stop instead of the FIFO stop?
So in this example, if he had a LIFO stop for the higher cost basis position, he's going to get out of that position break even without messing up that good buy from 330. So he can still give that trade the proper room, but the higher cost basis position that's now closer to break even or for a small loss, he can get rid of that versus selling them both or selling the FIFO stock and selling the good stock and then getting stuck with the higher cost basis.
Now, if this is hypothetically a taxable account, there are other advantages to selling the LIFO stock first as well, correct?
Well, yeah. I mean, if it's break even, it doesn't matter.
You're not going to have to pay any taxes on a break even trade, and you get to keep the long term winner.
Exactly. Yeah. So this is again more for, like Shake mentioned, for taxable accounts. It's really not going to have any taxable advantage for a retirement account, but still, you can see your own cost base. You can see when you're up and down in a name. So when you're up, 10% in a name, it's much easier to hold through 5% pullback than being break even in a name and then pulling back 5% against you. Again, we don't typically go into this too much, but we did mention it last week in one of the newsletters. We felt that it was a relevant example to touch on a little bit further. So with that, Shake, if you want, we can jump into some of the good and bad trades of the week.
Let's jump right in.
All right, so first off, you want to pull up that leaderboard just so we can still see how Carl is in the lead with that 1,000% trade in MNRA. And these are the top 10 trades so far from members in the Alpha Chat.
I've got a personal request here. Can we do a 1 week leaderboard?
I mean, that's a lot to. How long took me to put this thing together? You want me to do this every single week?
No. I'm saying a 1 week top percentage gainer.
Oh, I see what you mean. Okay.
I got some fucking 75% 3-day trades going on. I'm nowhere near this leaderboard.
Well, I don't think I can make a whole leaderboard just to boost you up a little bit. But that was which trade was that in? We're gonna go over that good trade, bad trade.
You want data, DADA? You want BILI? I got a few. Lemonade's pretty sick. That was 65 in 3 days. Whatever.
So
make a lot of money. Yeah, I do all right for myself.
So why don't we go over all these in good trade, bad trade? I'll make that your leaderboard. All right, so let's first start off with Tom Van Meter for his bad trade in this McDonald's.
You got it.
I'll just recap what he did. So see, on 11/24, he bought up through 220. He had a stop prior low day versus 215. Let's see, December 2nd, it gapped down against him. He used a 15-minute rule to stay in, and then he added, I believe he added that day. Let's see.
He just kept moving his stop down? I don't know.
Yeah, so let's see. Limit order out. Okay, so he got trapped in it on the gap down, and he kept trying to, kind of pick some up and then trying to limit sell some, and never really ended up happening. He says, I had no real plan, and ended up losing about $2,000 and didn't, follow through with this typical trading where he's like, this is McDonald's, what can go wrong? So again, I think the primary point of this is why we don't buy on the way down. And when you don't have a plan, unfortunately, you end up losing money when nothing about the trade really failed necessarily.
If you fail to plan, you plan to fail.
Yeah, so I think he learned that lesson again. I think Tom had a great year so far, so I think this $2,000 lesson
He's been killing it.
Sucks, but in the scheme of things, it's,
You know what I'm actually seeing a lot of? I'm seeing a lot of guys who, I've been doing this a little bit as well last couple of weeks, making some mistakes. Guys who have been on the hottest runs are the ones that are now you're seeing make mistakes from overconfidence or maybe complacency. I just noticed a few guys who have been absolutely killing it come out and say like they're extra frustrated this week and last week, and they're just making all these mental mistakes. And that's just a common thing in trading where it's like you get overconfident. You subconsciously think nothing can go wrong because you keep seeing gains in your accounts, and then that's when you start making mistakes. That's when you got to almost be, tighter with yourself. So I'm just look out for that. It's my suggestion.
And even with like this McDonald's, like it technically formed a bear flag at highs. Unfortunately, we haven't really seen bear flags really continue to the downside for the longest time. So we've been focusing more on those support buybacks and buying on the way up. And this is unfortunately where he's buying the bear flag and it broke down. And even the textbook measure moved with that bear flag, and he kind of just got stuck in the middle of it. But again, going along with your same point. Next, we have Justin. He had a couple of charts. This first one's this Chewy. All right. You want me to go through it?
Yeah, you got it.
Yeah. So again, pretty textbook. We can see this little bought through prior high day resistance. We see that little flag forming, stop below the low of the day. Again, very textbook. Bull flag breaker that he took. He kicked a third at 2-1. Stop prior low a day, had a nice move up, and then he upped his stop versus that 70 pivot. I'm hoping that his stop was versus below 70, being it was 69.89, not actually 70.39, but that we're not sure about. And he's up about 21% in the trade, so he took a little bit off, and then still holding his winner. I think this is a great trade, Shake. What do you think?
I think that's a great trade too. I got some Chewy with you.
All right. Let's see. So next one, he's got the Starbucks.
Ooh, I'm in this one too.
You want to go over this one since you were probably in the same trade with him?
Yeah, I mean, mine was long term, so I mean, we had a different trade in our hands where I wasn't aggressively upping my stops as much. But so he bought this one through 91. First stop 89, gaps higher, sells on the gap, waits for it to make a pivot. This is impressive. I really like this. So many guys are just, when they have a lot of profit on their side, they want to over aggressively up their stop. He waited for a pivot and then moved his stop. And then same thing, waited. He's still in the trade. This is why you wait for that pivot if you're long in your more long-term macro trades. And this is just a great job across the board. And he's still in it. And now he's got to stop under 99 for his stock that's $89 or $91. So just an overall great trade here.
I just a similar example like on the reverse side with like Shop where I moved it the stock up too early. Where had I given it that day or two to put in the pivot, I would still be in it. So this is
right.
Great. Great trade so far. Next, let's see. I think it's the C.
SE.
Yeah, SE.
You got this one, baby.
All right, let's see. Okay, bought through the flag through 183. Again, similar trade as the prior ones. Original stop below that area support. He stopped up. He upped the stop. He upped it again, and he kicked some into that first pop. So he kicked a third, and the stop. Let's see, stop on the prior. Okay, so he's kicking some up, and he's moving a stop up. It seems like this one, based off his entry, is probably to come back to his price, just given the move it had based where he was buying. But again, not every trade is going to be a slam dunk. And let's see, next one is this Globus, and then we have Chipotle.
G-Med.
All right.
So
well, G-Med, I think
G-Med's a sick chart. This G-Med, that 58 level, that that's the level right there. That's 58, 60 level, and then it finally consolidated near a level. That was just it was a big macro level, so you can't really tell from the chart. So what he did here, bought through 58.50 for the macro breakout. All right, so that was that level I was talking about. Can't really see it on this chart. Low day stop, worked out. Not always going to work out in those breakout trades. And now he waited for the pivot. Now he's got to stop below these pivots, and he's letting the thing work for him. That looks great, and now he's just riding out a winner. Good trade.
All right, and last up we have this Chipotle. CMG. Let's see. All right. So let's see, he bought this up through 1300. That was the prior 2 days resistance. And then we can see this 1350 has been in a bigger area, so I guess it looked like he was trying to anticipate that move. Stop under 1260. And then some under that 1274. So risking 25 points in Chipotle. Again, not that much relative to the name, but it's just still not breaking above that 1350, which is what we want to see. Shake, would you still leave those stops where they were tiered, or would you kind of move that up to?
Since it looks like I would leave the 2/3 where it is, and then this 1/3 that he looks like he's trying to be more aggressive about raising a stop on. Maybe you give that to today's pivot low area. But again, this is a big support area. The 1260 is the correct stop for sure.
Yeah. See, I'm looking at that too. All right. I think the one thing with the two of his trades where the stops were below those pivots, like the GMET, for example, would you have left that one below that half, or would you have just given it the extra under the figure versus 58? Because he stopped up
50,
to.
Yeah. Naturally, I would have put it 57.89 below the whole figure where we know liquidity is, rather than 58.39, the 40 cents. But
yeah.
Other than that, good shit.
Yeah, no, all great trades. That was just the one thing I noticed from those two trades I want to just double check on. All right, so next we got Garrett Eddy with Redfin.
Oh, hell yeah, good job. All right. So he bought this out of the base, this 44, 45 area. I don't know where his first stop was, but sold the third on the way up, booked some. Each sell was the third, got more into booked more into strength. And does he have a last third? And the last third he's got trailing, so that's great. This is great job. This is an awesome trade. He split up his stock. He was systematic about his selling, covered his risk into the first strength. When it seemed like we were talking about this. So the second third, you're trying to pick a top. It got a little, overbought, so he sold some, and now he's got a last third to kick into this huge move. So this is a great trade.
Yeah. All right. So we're after the member ideas, or the member good trade, bad trade. If you want, Shake, I got a quick 2 or 3, and then if you want to go over some of your big winners that
No. I don't need to. I don't need to gloat. All right. I come here for the people. Okay.
I mean, if there's some lessons learned, I think the people want to hear.
I'll tell them about the lessons learned then, not the gloating. All right. All right. Let's go, Merck. What you got?
All right. So again, Merck, we've been talking about for a little bit. We've been building into it again. Dow 30, lower beta, pharmaceutical name. Nothing you're gonna lose your sleep over. This is a name I was kind of building into up through 82 to anticipate that 84 breakout. Unfortunately, it hit that resistance to the penny and started to reverse. This was one where today I upped the stop versus that 82 half area. Got out basically break even, marginal gain maybe 0.5% in total in the trade. But again, later on in the day, thing got smoked. This would have been a losing trade had I not upped it to cover my risk. So that was just kind of luck in regards to upping it and the market kind of pulling in. And on the flip side of that, ABT, the next one was one that I initiated today up through. Shake, if you want to pull over the next chart.
Yeah, got it.
All right. Again, so I've been watching this ABT forming some of these higher lows versus 100. We saw it versus 104, and we saw most recently holding up versus 105. So I was looking to buy up through 108 to anticipate and prepare for this, 115 all-time high breakout. Again, off the open, it looked great, and then again by the end of the day, most things were pulling back in. So this is probably going to be a trade I'm going to get stopped out versus down through that 105 area. So it's probably will be a failed trade as it looks right now, but time will tell on that. And then lastly is this Home Depot. So Home Depot, this has been my main focus for the last week or so. Again, this is a name that we were kind of hawking through this 290 area, and it's pulled into support. We saw, late last week it tailed through that 260 and came right back. So I started to pick some up, and I added some more again today versus that 260 area. So this is what I'm trying to build into to, again, prepare for that breakout through 290 in some time. Those are the main three for this week that I have. Shake, what about you?
I just have two to go over real quick. I'll go over my good trade. This pen was a good trade today. I've been in this one since this little day here. We bought the breakout. I did get stopped out of some, and then kind of covered some Friday to just downsize on risk for the weekend. Then I saw some volume, bought this one back today. Got some kicks off. I think this one looks really good for the long term. But more importantly, the mistake, man, this Amazon. I've had a feeler in this Amazon. I've been trading around it since here, this 1124. I've just been had a piece, and then Friday I had a 30.75 stop on my last shares, and it comes down and ticks 30.72, and I don't buy it back. So I'm out of this one, and then it makes the move today after I've been in it for like weeks watching it. And then it didn't really give me a great opportunity to buy it today, I felt, unless I bought it right off the open. But that's a major mistake on my part. Getting shaken at Amazon by 3 points is the same as getting shaken out of a $30 name by 3 cents. So it's like I gotta be more diligent about watching where I'm getting shaken out and stuff, because I need to be in this one if I'm in it for a week or so. I have no stock when it's gonna make a move. So that was really bad on my part. That was really frustrating. Got stopped out at the low. But like I said, I think it's time to take the foot off the gas for myself personally. I don't see myself being too active these next 2 weeks.
Yeah.
That's it.
All right. So let's see. We got top ideas.
Yeah, there's not much I'm looking at. I like this signer right here. SYNA. Really nice daily, weekly chart. This one looks good through 83 here, coming out of a little channel. But not a ton of charts I'm really salivating over right now, especially today's action, very sluggish.
Mm-hmm.
What you looking at?
Yeah, mine literally the same. My notes are all sectors bearish, engulfing, up stops, raise cash, be patient, gun to head. If I have to buy something, it's going to be this Domino's pizza. I do still have some other orders in. I think this Apple in time through this 125 looks pretty good. And this EW through 86, 88. I think both of those do look good in time. But like I said, when you got every sector closing bearish engulfing, that's usually a pretty obvious telltale sign of what's to come over the next couple days. So I'm with you.
And this doesn't have much to do with anything. But so we've seen like a ton of frothiness in the market. And then if you look around at the frothiness names, the DoorDash, that really sold off today. Airbnb, that's getting killed. Snowflake is way off highs. So we're just seeing, we're seeing the exuberance almost taken out of the market a little bit. And those are the names I'm looking to. That's kind of what told me it's like, all right, probably time to chill more so. we're not getting those sick moves from the recent IPOs as much anymore, things like that. So just taking the foot off the gas.
I have a funny little quick story about Airbnb if you want to hear it. A dumb money story.
I'd love to.
So one of the guys DM'd us and he's like, oh, I missed this huge profit in Airbnb. And I'm like, oh, what was the trade? Because day one, I had a quick little pop and they got smoked. He's like, oh, I could have bought it the day before it came out at 68 and I could have sold it at 165. And I'm like, what are you talking about?
How can who's got the connects?
So,
I need those connects.
So he tells me how he saw it on Robinhood that he could buy it the day before it IPO'd at that fixed price. And I was like, oh my God, like you are a moron. But anyways, if you want to jump into book of the week, do this really quick.
I just finished that. What was the book I was reading? Delivering Happiness by the Zappos. Zappos CEO, and he was a guy who just who favored just quality of life over anything, and it really showed in his business, and they really enjoyed building the company there. It's not one of those stories like you hear the stories about the beginning of the Amazons where they were just working like slaves and all hated each other and hated life and all these things, and all these big tech companies in the beginning, these guys were working 20-hour days and just slaving away. But he was so focused on delivering a great corporate culture that everyone who worked there loved working there and things like that. And it's just a great business lesson. And, life's short. Enjoy what you're doing. The more passionate you are about what you're doing, you're going to be better at it. It's just simple math. So that was a really, really good book. It was one of my favorites of the year, Delivering Happiness.
Yeah, I got that one on the way. I'm still working on that advertising book. I'm on the tail end, so no new books this week. But I was talking with one of the members about the 5 a.m. Club. Very good book. Again, most people aren't going to wake up at 5 a.m. But one of the practical lessons from it is owning your first hour of the day. And he breaks it up into 3 sections. So the first is 20 minutes to educate yourself, such as reading, 20 minutes to plan, and then 20 minutes to break a sweat. So his main premise is that his first hour. And of course, no phone. So that's the one main thing. Yep.
I need to write one of these fucking books. Well, what time do you wake up?
I do not wake up at 5. I'm up by like 6:30, and I'm working or doing stuff by 7 o'clock.
All right.
I'm usually good to go. But yes, I'm not waking up at 5 o'clock. But I typically follow a similar regimen. Usually I try to work out 15 minutes and 20 minutes in the morning. I read every morning. Try to touch my phone for the first hour, and then plan the day ahead. Usually just a simple checklist of what I have to kind of get done for the day.
Yeah, I just feel like I could write one of these books. You wake up, don't touch your phone, start learning, work out. Eat healthy. Did he say eat healthy? I bet he said eat healthy.
I'm summarizing this book, but honestly, if you can see, I don't know if you can see in here, but how many pages I have folded. This actually is a really phenomenal book. I'm just hitting on one of the high points or one of the main premises of this book, but there is a lot more in this book than simply just the first hour of your day.
All right.
That's just
all right.
That's the main piece.
All right.
All right. You don't want to go over your data trade? I feel like that.
No. I come to teach. I don't come to gloat.
I gotta just have Garrett throw in a little watermark of the alpha alerts through 36 before it ripped to 60. But
yeah, no, it was good. It's good trade. It's good trade. It's good trade. All right, with that, we out.
We're
Gotta
done.
take dogs to the park.
All right, guys. Till next week. See ya.
See you next week. Later.